day today, right? It's your boy, Coach UV, and we are back with a halftime show, episode 5. Okay? This is the Unique Trading Group, all right? Where strategy meets mindset and discipline turns into income. Today I have a very, very juicy setup for you guys today, all right? I want you to watch and learn as I show you some nice setups. I have 1 or 2 nice setups and some commentary for you tonight, all right? I appreciate you clicking this video tonight. Do me a favor, go ahead and hit that like button. You know it's going to be a valuable video. I always give you guys value. And make sure you hit that subscribe button, all right? So that you're notified of when I drop valuable videos, okay? Now, I don't want to hold you too long. Tonight, we're going to talk about the 4 major indices quickly, right? The MDY, SPY, IWM, and the QQQ. We're going to see what made certain stocks move and be very selective for the ones who went down, okay? But first, I want to head over to the Discord, all right? I want to go over to Traders Creed, and I want to show some love to a certain person inside of my Discord. I think they had a very, very great message, all right? And so I want to make sure that I read that so we can reflect off of their message, okay? If you're struggling, if you're finding it hard to stay consistent, right? If you're FOMOing out, right? Fear of missing out. You can't find your Achilles heel in trading, all right? The current strategy that you're using is burnt out, all right? I am for you. If you want free training, a free course, check out that link right above that pops up, all right? Check out that video, stop the video right now, come back and watch, but I want you to take that free course, all right? In that video, all right, I teach you how to turn discipline into income. That's right, my live trading account, live receipts and trading account, all right? And if you want more, if that video is just enough for you, okay, click that link below, book you a discovery call, take the one-on-one mentoring, all right? It's going to be very beneficial, okay? Now, let's hop over to the Discord. All right, first I want to read this Traders Creed. If you're not familiar with the Traders Creed, it's from a guy named Mark Douglas, all right? He wrote a book called Trading in the Zone, all right? Trading in the Zone and the Disciplined Trader, all right? His name is Mark Douglas. This is about psychology and the mechanical aspects, the mental aspects of a trader. This will make sense to you more on down the line, all right? But what good is psychology if you don't know the context of the day that you're working with, right? Those 3 day types that I always mention to you guys. 3 day types: narrow range day, test and retest day, and trend day, all right? And so psychology matters when you have a context of knowing what you're doing, defining your entry, your exit, and your risk, all right? Not until then, it's if this resonates. So we're going to read this together. Get used to it, all right? We're going to read it together. The Traders Creed from the top. You ready? The Traders Creed. I am a consistent winner because I objectively identify my edges. I predefine the risk of every trade. I completely accept the risk, or I'm willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. Again, I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them, all right? I want you guys to remember this, study it, save it, get familiar with it, all right? I read this and go through this mentally every day before I trade, all right? It really, really helped me. And as you read this and you trade, practice along with the charts, it's going to start making sense and resonating to you on why you need to be following these rules, all right? So let's go ahead and hop over to lessons and losses. All right, I want to read a note from a member who joined my group a couple weeks back. Her name is Joy, all right? I wanted to show some love to the guys who are in the Discord and who are watching my videos. I really do appreciate you guys, all right? And sometimes we can learn from other people's mistakes. And so I'm going to use this message from Joy, all right? She has some information. We were talking about a trade in Tesla, I want to say, and this is what came out of it, all right? This is back on the 5th of June, all right? About 2-3 weeks ago. So she said, okay, guys, this is a really tough loss to take today. I was in a good strike, but my entry was terrible. I got bear trap. A bear trap means she tried to take a put, or she tried to bet or trade to the downside on the chart, and she got trapped, all right? It wasn't the right trade. Bad timing, all right? She got caught and the market went towards the upside, all right? So I got bear trap and I took a loss since my contract was short and the theta was high. I didn't want to lose any more money today. A very volatile trade, and basically I wasn't ready to part with the full $380. Turns out this contract I bought went up to $4,500. So she made an extra $4,000 on that, right? That's how much it would have been worth had she held on to her trade and been convicted. $4,500 today at its highest because of that theta. So, as you can imagine, I was sick to my stomach watching this play out. My lesson is to, number one, wait for the pullback to retest the open range breakout, ORB, to see what direction it's truly going to. Number two, don't rush my trades. Properly prepare my chart, have an exit and a take profit plan based on the setup. Trust the process. If I'm second guessing, it's because I didn't properly plan. All right. She says, thank you, Coach UV, for the pep talk tonight. You somehow knew I needed it and really appreciate you taking the time to give me my motivational talk. Please let me know if I missed anything, but here's a picture of my loss, and she showed a picture of it. All right. They're very transparent because there are wins inside of your losses. All right. So thank you, Joy, for sharing that. And a lot of times, guys, the way that you can capitalize off of good moves is to find high probability setups, A+ setups. Now, what does that mean? It sounds really good. It just means the best risk to reward. The best risk to reward, all right? Just for example, right, when you want to see what they call market structure, okay, we have a trend, all right, a uptrend, all right? I'm going to show you the uptrend. Okay. 1 second, guys, as I navigate the screen. Bear with me here. We're going to refresh the screen and we're going to get over. All right. I just wanted to show you how you can correlate risk to reward with what we just read. Okay. That's why I'm doing this. I want you to understand. Okay. Let's take all of this off. All right. Let's grab this again. All right. We got a highlighter, right? So the point that I drew this line from, all right, I'm going to here, right? Now, what does that represent, all right? Even if you're new, all right, we have something called uptrends and downtrends, all right? This is the uptrend, a step ladder, right? Why is that? Okay, because we have, right, this is your starting point, price leaves, we fall back down, but we don't fall all the way back down to where we started from. We actually pivot here and bounce, boom. So this creates a higher low because this point, this low in price is higher than that. All right. So higher lows are a bullish structure. All right. Higher lows are a bullish structure. All right. Higher lows. All right. This is bullish structure. Higher lows. All right. Pay attention to the cursor. This high is higher. I'm sorry. This low point is higher than this one. This point, low point, is higher than this one. And so on and so forth. You see the sequence. And you also have higher, this point. This area right here, check my cursor. This pivot point, higher high, is higher than this one. And so is this one. So that's where you get your higher lows and your higher highs from, okay? Higher lows and higher highs. I want you to understand what that is. Higher highs and higher lows, right? These are your bullish structure, right? For uptrends, okay? Higher lows, higher highs. Now, when we do a downtrend, all right, let's say we did a downtrend, all right? The downtrend will be the opposite, all right? Downtrend, all right? See that? The opposite of what we just did, okay? Of course, you know, down is red because the candles turn red. It's for, you know, losing money or taking profit, all right? But as you can see, move it up here, all right? Same thing as the uptrend, all right? Make this simple and quick. We have a downtrend, a series of lower lows and lower highs, all right? Lower lows and lower highs, all right? Downtrend, the opposite from an uptrend, all right? Opposite from an uptrend, all right? Why is that? All right, say we started from here, all right? Price fell, it retraced it back up, folks took their profit, and then they rejected here just to go back down. This point right here creates a lower high because it's lower than this price point. Same for this one. This is lower. So what you have is a downtrend. You see what I'm saying? And so you can measure that price and find out where you want to take your trades at. Okay? All right? You want to grab the edges. All right? So now that we know that, let's hop over to the meat of the discussion. All right? I mentioned the four indices, MDY, QQQ, IWM, and SPY. And since we're on SPY, I want you to notice something really big. Okay, today the markets were kind of caught off. We had some red star photo news, right? Economic data. We had some earnings, and tomorrow we have some more data coming out at around 8:30. Okay, I think it's going to be the unemployment claims. All right, we can check that. Don't quote me on that, but that's what we have. And so people are very selective in the market. Money was made and money was lost today. All right, so based on that higher low and higher high thing we did right here on the 1 hour, all right, isn't this an established point? Okay, from right here to right here, all right, this point right here, isn't this a higher low than this one here? Okay, let's make our parallel channel, all right, and that's what we have. All right, so at this point I would have bought right there because this was my higher low, and we got to push all the way up to 606. Now I made a video back Monday, the episode Monday Madness Monday, where I informed everybody that we needed a break and that we could see parabolic moves towards the upside overnight, and that's exactly what we got. We got moves overnight, and this is a 2-day rally. All right, a 2-day rally. Didn't move as much as it did on the 23rd, but it still moved up, and now we have a little bit of exhaustion. Okay, a little bit of exhaustion. So what I want to see, all right, what I want to see is what they call a pullback. All right, right now you have your parallel channel here. All right, your trend down. Okay, all right, you had price breakout from this point, right? So now what you want to see is a breakout pullback. You want to see a breakout pullback. All right, here's your first breakout pullback zone. Okay, you want to see it pull back there. Okay, and your second one will be back down here, all right, to these previous zones. Okay, so be aware of that. Okay, you have these zones, okay, for a bounce, maybe to trap the bears in for a 2-try failure. You see that? And why is it so hard to believe that? Right? Look left. We had the same thing here. See that? Same thing. Price fell down, right, to a previous gap fill, trapping the bears, all right, find consolidation, find demand, and we move back to the upside, all right. Anything is possible. You just have 3 different scenarios, okay. Right here is a pullback zone, breakout pullback zone, and right at the point of control, right here, all right. So pretty much what I'm telling you is that $600 is the area of interest for a pullback. 605 is actually another zone where you want to say to yourself, if it pulls back to 605, we could possibly see demand. All right, 605 is about right here, okay, right inside of this range. Let me move my chart and squeeze it up so you can see here on this hour time frame. All right, we're looking for breakout pullbacks. All right, right when the rookies think that the market is going to sell off. Now that's just one scenario. Now for my number 2 scenario, all right, number 2 scenario, I want to show you what I mean, because we could get that pullback that I talked about, right? But you want to only take that put if we can fall below 605 convincingly. Now, let's say we put a line here, right? A red elementary horizontal line, right? It stands for puts, all right? If it can break below there, I want puts. Now, what most traders will do, pay attention, all right? What they'll do is they'll take the signal, they'll wait for it to break, and they'll get in like what happened here, and then it shoots back up. What you want to see is price convincingly do this for the beginners, right? For the beginners who trade with a little bit of fear, all right? You want to see the break of the red line, it retests the previous demand level right here, right? And you want to see it go back and reject the same place it broke out from, because that creates a lower high, all right? A lower high. Hope you guys are listening, all right? And you trade the range the same way we did right here, okay? Same way we did right here, okay? It's the same thing, all right? Just a smaller version, all right? I want you to remember that tomorrow, right? Now let's move along. Now this is what I mean, all right? MDY, all right? We have the MDY. This is the mid-cap 400. Today we had a sell-off, all right? We had a sell-off. This is the opposite from the SPY. Now remember, you have MDY, you have SPY, you have QQQ, and the IWM. I'm going to show you the IWM. This is the 3 out of the 4. That was more upside today on the QQQ. The NASDAQ, all right? The NASDAQ, very selective because Tesla struggled today, all right? But there were some stocks in the NASDAQ that moved. You just got to understand. And it's the same thing with the triple Qs. The same scenario with the triple Qs. You want to wait for a breakout pullback. A breakout pullback, okay? Previous parallel channel, all right? Called inducement. This is inducement, all right? And you have this move here, all right? From the ATM, right? My call trigger, all right? High probability setups. ATM sound, all right? You have a possible head and shoulders pattern, right? A possible head and shoulders pattern on the QQQ, same as the SPY, all right? This one looks more clear, but if we get a breakdown below 538, 539, I want to say 539 needs to clearly break in order for us to see some downside continuation, all right? See some downside continuation, all right? Same scenario with the SPY, all right? I want to see a break and a retest, all right, for that channel to catch that higher low. Don't chase the move if you're not already in it. You with me? Same scenario, all right? For an even bigger flush, okay? 535 and 532 are my targets for puts, okay? But we need to convincingly break below this range here, below the volume point of control, all right? We need to break below that, all right? For a breakout pullback, all right? A breakout pullback. These are the type of trades, all right? A breakout pullback. What does that look like here? All right, we have the breakout pullback to these zones. This midway point is the 50% point of this entire move, right at the gap fill. All right, that yellow line represents a 50% move of this entire move. All right, measuring price. We're measuring price, okay? Measuring price, and that's what you see, okay? All right, don't make this hard, make it simple, okay? What I'm doing is preparing you for a scenario so that way you're ready, all right? We could pull back here, or we could pull all the way back down here. Which one do you want? If you wake up in the morning and you miss this move, all right, don't chase the move. That little voice in your head that tells you to chase, don't chase it. Don't chase it. Wait for a pullback to that 50% mark, right? Right there of this entire move. See how it plays out right by the 21, all right? That underbelly of a range, and then you want to short it, all right? That's your best entry, all right? If we resist the underbelly of that range, all right? To take it back down to create new lows, or maybe bounce here for a double bottom, right? To trap in the bears. Let the bears try once, let them try twice. Same here. Let them try once, let them try twice, and use their stops as fuel to the upside. See how you have different scenarios, all right? Last but not least, my final scenario is the breakdown of here, okay? We can break down here. We can break down trapping the bears right there. If the bears try once, let them try twice for an M shape, right? See the difference? To retest the bottom. I hope you guys have been enjoying this video thus far. If you have been learning, if I'm teaching you something new, if this is resonating, if it's very exciting, hit that like button, all right? It helps with the algo to push to people just like you who want valuable information like this, all right? So, IWM is a small cap, all right, the Russell. We had some fall down here, right? Very selective, all right? All four of them need to be moving orders, right? So put those on the chart. MDY, SPY, QQQ, and IWM. Out of these four, we only had two going up and two going down. And so if all of these have the major stocks, all of the major stocks, and you have half of them working and half of them not, what you have is a selective market. All stocks are not going up and down, all right? You have to pick the ones you want, right? You can make money on both sides when you're trading. You can make money to the downside, all right? It's called a put option. And you can also make money to the downside. It's called a call option. I mean, to the upside. It's called a call option, right? All right. Even if you're a elementary school kid, all right, they can learn to trade market structure and price action from what I teach. All right. So that was that. All right. I want to move on to Tesla real quick. We're going to talk about Tesla. Tesla had a bit of a sell-off. All right. A bit of a sell-off. All right. We had a major move since I called it out in the Discord. If you want to see that, I can quickly show you. Again what we had. We had a swing trade alert on Tesla. All right, we had a couple of trades. AMD is one of my swing trades that I'm holding. All right, here we go. 318.54. All right, this was back on the 17th of June. I insisted that this number, all right, this number. Remember this number on Tesla. If we see higher lows and we hold there as demand, we could bounce. All right, but if 318 is a magnet for price, it's a magnet, and price came there. All right. We were instructed about calls on Tesla at 318.54, all right? And Tesla shot all the way up to 358, all right? Okay? And so those same numbers like to play out, all right? And so what you have here, all right, I thought that we would get that move, but we stopped at 320. We stopped at 320. 318 being the number that we got into calls, that number will be right here, all right? Right around here, all right? W shape, right? Little consolidation. We broke out of that convincingly, all right? But we made higher lows. See that small? It's not as visible, but you still are making higher lows, okay? And the only time you see that, all right, there's a possibility that we can see some sort of movement towards the upside, all right? And so anything above 325, and we at 327 right now, or 326 post market, anything above 325, all right, is still bullish. We're still holding demand, all right? And so we can see continuation to the upside to go back to 333 and 331. 330, 331, and 330. These are my targets for Tesla, all right? These were previous magnets and previous zones. If we can get above it conventionally, we can see highs into the upper 40s and the upper 50s. But if we reject this mark here at 333, all right, we will see continuation back towards the downside, all right? That's what I'm looking for. It's also a bear pennant on Tesla. And so tomorrow morning when we wake up, all right, it's the 25th. This is for the 26th commentary. We could see a bear flag measure move. So these are my two scenarios for Tesla, all right? A bear flag measure move to retest 318 and 300, all right? These are scenarios to look for. 318, 300, all right? Of course, 305 and 310 is there, but parabolic moves at certain algo numbers that create price to shoot down like a vacuum, all right? I use the volume profile, all right? So that's Tesla, all right? PSTV, a penny stock that I alerted the chat on. I traded this stock 3 months ago in March, and it is here June, and it's just now starting to show some momentum. All right, I got into this stock at around 17 cents, right around here. We've seen some momentum today. This stock was up around 68%. All right, so from 17 to 31. Is a nice little piece of change. I did not secure profits. I'm still holding for a bigger target. I have shares. There are no options on this trade. All right. This is HalfTime show with your boy Coach UV. Hope you guys have been enjoying so far, man. I appreciate you rocking with me. If you stayed this long into the video, and I know that I'm bringing you some value. All right, and I'm having some technical difficulties with this PSTV. All right, so bear with me as I navigate this screen. All right, AMD will be the last stock that I look at to give you some guidance on that, and Google. All right, so PSTV. All right, what am I doing with PSTV? All right, I'm holding PSTV into my first target. All right, 53. All right, the next target on PSTV for me, which was before. All right, you can see it clearly on the 4 hour. These targets are. First target 53, second one is 60 something, all right, up to 60 cents, and we have 80 cents, all right. I'm not really looking for it to get any more bullish than that. We have to get past point of control previous, all right, of 84 cents in order for us to see some continuation towards the upside any further. But as of right now, I am swinging shares, and I'm swinging shares all the way up to that 50 mark for my first target, all right. Yes, first target, we need to get above 43. 43 needs to be a convincingly target for us on PSTV, all right? 0.43339, all right? 0.4339. We need to get above that for a parabolic move towards the upside, all right? That's what I have on PSTV. Last but not least, we're going to do AMD, and Google. All right, AMD is very bullish. Kathy Woods bought. I like the higher lows. I like the higher highs. I like the continuation and momentum. I also like the weekly time frame. We have a Fibonacci retracement. All right, AMD is trying to get back to 150 and 160 something in those mid-range 60s. Okay, that's what we have. We have continuation. We do not have higher highs, but we do have higher lows, and we're breaking the 50% mark of this entire move. You with me? So I'm holding AMD until 150. Then I'll consider shaving off. Last but not least, we have Google. All right, we're gonna do Google. All right, the old Google. All right, here on the weekly time frame, I see a W-shaped forming. All right, a technical bear trap pattern. All right, here we have this big old W. All right, okay, we need to convincingly get above 181 and 180. All right, 181 and 180 is what we need to get above right here in order to see upside continuation. Right now we have higher lows. All right, higher lows, but we don't have higher highs, but we have higher lows. So an indecision moment. All right, and so let's go out to the monthly real quick. I want to see what we see. Yeah, I see a technical trap right here. This is part of the NASDAQ, and if we check the QQQ real quick, all right, the NASDAQ has some positive push through today, all right, And so since Google is part of that, you see the same thing, all right? Google is inside of the NASDAQ, all right? You also have continuation post-market right now on the NASDAQ. So that's really, really good for Tesla and Google. Hopping back over to Google, right? Here's my plan for Google. If you're not already in, I would suggest waiting for a pullback. But we are making higher lows, all right, trying to retest these highs. That could be possible, all right. If the data comes out tomorrow at 10 o'clock, all right, watch for that 10 o'clock news. Either you need to be watching, all right. If you're not ready, stay out of the trade. If you're not in it, stay out of the trade, all right. But at 10 o'clock, we'll have that red star photo news, or it might even not be red photo on forexfactory.com, but that data is going to affect price. And depending on what it is, we can see moves back to retest these highs, or we could fall back down to retest the breakout point, which is around 167. So you want to watch out for that, all right? You want to watch out for that, all right? The weekly time frame is looking bullish, all right? This is intraday 5-minute. We are above the 21, all right? We are above the 21, okay? And I'm going to also use this VWAP, all right? And we're above the VWAP for now. So I want to see some continuation to the upside as long as we have some strength, all right? And I want to secure profits at 172 tomorrow intraday to see what happens after that, okay? So that is my video for tonight for the halftime show. Hope you enjoyed the show, all right? Gave you some great commentary, all right, on a couple of stocks. Hope you guys made some money out there, or at least learned something in this wild market. We got about 2 days left. You guys look forward for the OPEX Friday video, all right? It's going to come out Friday. And again, if you want to join a thriving community, check out that link below, all right? The unique trading group where strategy meets mindset and discipline turns into income. Always remember, guys, always remember that trading is about risk to reward, and it's not about being right or wrong. It's about risk to reward, managing your setups, all right, and understanding your risk, all right? So find you a mentor and find you a setup or a style that you like, or stock one, right? And find that and hone in on it. Study and practice, because trading is a business, and the more you get that through your head about it being about risk to reward in a business, you'll think about protecting your capital and coming up with a trading plan, all right? If you take a 1% loss today, you still got money tomorrow. But if you take a 100% loss off of a call out or a trade you weren't confident in yourself and you lose all of it, then that's your whole account, all right? So risk to reward and having your own plan, discipline, all right, is the way you stay in the game, and it is the best way, all right? So again, I'm your boy, Coach UV. I appreciate you guys watching the video this long. If you have, hit the like button and subscribe, and consider joining the channel. All right? So until the next time, guys, peace.